Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
With that, let's get to answering the MF queries that have been coming in. Our two experts, Harsh Roongta of harshroongta.com and Kalpesh Ashar of Full Circle Financial Planners and Advisors, join in. Gentlemen, good afternoon. Thanks very much for joining in. Our first query comes in from Parijat Suman. He actually writes to us he's called us from Mumbai. Hi, Mr. Suman. How can we help you, sir?
Yeah, wanted some advice from you. I am 65. I have a fund of around 60 to 70 lakh, which I want to put in a mutual fund portfolio. I wanted suggestion both in terms of what liquid fund we should put in money first, and then I would like to transfer it gradually over to another equity mutual fund. So I needed your suggestion from you.
Okay, and I'm assuming that this investment that you want to make is separate from, say, your requirements in terms of what you might need monthly for expenditure, right? Are you looking at this just as an investment?
Just the opposite. I'm looking for at least 20 to 25,000 per month from this portfolio for my monthly expenses.
Okay, so that makes sense. Harsh, let me come to you first on this. Mr. Suman, a retired person looking to invest about 60 odd lakhs. The key being that he's looking for some sort of a regular income from this, maybe about 20-25,000. Would you?
So 2-3 quick comments. I think first, the way he is going about it is excellent. I mean, he's not looking to jump straight into equity.
Yeah.
He's thinking of first putting it into a liquid fund and then slowly shifting it to equity. Again, I mean, he is, I think he's mentioned he's about 65 years, still a long way to go.
Yeah.
People live well into their 80s and 90s. So he still has 20-25 years to go, which means you do need some equity component. Now, obviously, pure equity at his age, even if he is a very aggressive investor, is not something that one would advise. So depending on the risk profile, okay, it can be a combination of these hybrid equity funds that we see now. I mean, if he is very aggressive, you can look at what was the erstwhile balanced funds, which are now called aggressive hybrid funds. You can, if you are not that aggressive, if you are only moderate, I think you can look at an equity saving funds. If you are conservative, you could look at the debt hybrids, where the debt component is much higher. The money that you need, do not take it as dividend. I mean, dividends in a mutual fund make no sense. I think except in one very specific circumstance, dividends make absolutely no sense. Do it through a systematic withdrawal. You can keep increasing your withdrawal as inflation comes in. The amount that you have, and I think probably the expected returns from each of these, it should be comfortable. You should be able to withdraw inflation adjusted 25,000 rupees for the next 20 years or so. So I think that should not be a problem. Which liquid fund to put in? Depending on which of these hybrid funds you choose, in that same fund house, put it in a liquid fund so that you can systematically transfer it to the hybrid fund that you would choose.
All right, so I believe that answers your question. With that, we move on to the next one. We have Mr. G. N. Prabhu calling us from Bengaluru. He's been investing about 3,000, 4,000 rupees a month in multiple funds. Mr. Prabhu, what's your query?
Yes, I have been investing for last 1 year. First, thank you TV18 for providing me an opportunity to interact with the experts. You have my details?
Yep, we do have your details, but if you could ask your specific question, we'll take it across to our experts.
Yes, I have 5 funds, that Birla Frontline Equity, then LNT Value Fund, Growth, ICICI Prudential, Value Discovery, HDFC Hybrid Equity,
right,
and then DSP Midcap.
Okay.
So these 5 funds I have, I can spare about 20,000 a month. I have been investing at 16,000 for 1 year now.
Okay.
Initially, I was thinking of going in for only 3 to 4 years.
Okay.
I can go on longer also.
All right. All right.
I just want to know whether that mix is proper, or whether I have to change it or continue the same funds.
All right. We will answer your question, Mr. Prabhu, just in a bit. In fact, we'll put it across to our experts. But in the meanwhile, we have, I believe, UPL numbers flashing, or they've hit the exchanges. We are awaiting some details to come by. As of now, I believe our ticker team is just about getting their hands on the press release. Actually, Kalpesh, okay, now we have the numbers. Net profit at 514 crores was a poll of 518 crores. No problems as far as the net profit is concerned. Can you open the press release, Sumaira?
Yeah, actually, but it's in such fine print that I'm actually unable to this thing. But, you know, it was expected that it would be a decent quarter.
Right.
The profit number looks to be absolutely in line. In terms of revenue growth, the expectation is that we'd see, 4134. So that's also pretty much in line, actually.
So net profit 514 crores compared to the poll of 518 crores. Revenue also absolutely in line with our expectations. Soon we'll be joined by Sonal as well, who will run us through the other details. But revenue at 4,130 crores as compared to our poll, actually pretty much in line. Sumaira, any other details that you have?
No, actually, we'll have to also see what the margin number looks like, because the EBITDA actually has to be calculated for accounting for forex gain, loss, whatever. So we'll have Sonal join us and give us that number in just a bit. I'm interested to actually see the performance of the Indian market, because this quarter, 847 on the EBITDA. So it's just a tad ahead of what our own estimates were. Sonal, what's your first take on the numbers?
So basically, the numbers are absolutely in line with what we were expecting. Revenues of around 4,131 crores is versus our expectation of 4,121 crores. That implies a growth of around 11%. Profits also are absolutely in line with what we were expecting. And majorly, this revenue growth was expected to be on account of domestic revenues. However, the company does not really give the breakup in its release. If I go through the numbers, so cost of materials, they have gone up, and that's the whole reason why we were expecting EBITDA margins to be flat this time around. The EBITDA margin number, have you got that number as of now? But 1,839 crores is the cost of materials this quarter versus 1,647 crores, and EBITDA margin at 20.4%. On a YOY basis also, it's like a 20 basis points increase, but almost again in line with what we were expecting, and that is basically on account of higher cost of materials. Also, depreciation has also gone up year on year, and so have finance costs, and company has actually written a note to that effect. Finance costs include net exchange difference on account of profit or loss arising on foreign currency loans and mark-to-market losses on forex contracts, and that's the whole reason why finance costs have risen on a YOY basis. Profits also bang in line with what we're expecting, but definitely we will need what the breakup is in terms of geography. We were expecting 11% growth from India and flattish growth from Latin America, and remember, these are the two segments that actually contribute 50% plus revenues for UPL all the time. So that is one detail that I'll be watching out for.
All right, Sonal, thanks very much for that. So UPL for now up about 2%. All right, let's get back to our MF corner. We were on the line with Mr. GN Prabhu. So I'm just quickly going to read out his question. He's been investing about 3,000 to 4,000 rupees per month in multiple funds, some of which are DSP, BlackRock Midcap Fund, ICICI Prudential Value Discovery, L&T India Value Fund, Aditya Birla Sun Life Frontline Equity, HDFC Hybrid Equity Fund. So I think he's chosen the growth option in all. Kalpesh, he wants to know if he should continue with these funds. The time horizon that he has in mind is about 3 odd years. Are these the best options for him?
So the fund component which he has right now is absolutely fine. And he's got, fortunately, a mix of large, mid and a hybrid category in the portfolio. So the fund per se does not need any reshuffle as per the present component. Now, the only thing is that in the last 6 to 9 months, we've seen that the markets have been very choppy. And obviously, that the results also of this performance of these funds would not be very great if you look at the returns on this fund. But the real thing when you do an SIP is the long-term view you keep in mind. So I would sincerely request Mr. Prabhu that don't look at the last 1 year returns. Your fund choice is very good, and look at it for a horizon of 5 to 7 years. And also considering that you're 64 years, I think there should be a little bit more of a conservative bit to your portfolio, because if you look at the fund which you have in your portfolio, they are a little bit on the aggressive side. So I would suggest that you could have a hybrid fund allocation more to the SIPs which you are doing, and I think then you should be good in a 5 to 7 year time horizon.
All right, Kalpesh, thanks a lot for that. Mr. Prabhu, I hope that answers your question. In the meanwhile, can't take your eyes off Dabur. That stock should come up for you, up 6% now, recovered about 8.5%, 9% from the lows. Initially, we saw a bit of a knee-jerk reaction on the downside as the results hit the screen, but right now the stock is at a 52-week high. Perhaps could have been at a record high as well. 21% domestic volume growth on a stock which was trading at an 8.5%, 9% discount to the sector.
Yeah, and you know, when the numbers came out, when we saw that volume growth number, I was going to comment that the street is a little slow to actually react to that. Well, I'm glad that it's
slow, but
up
right
since
now,
then, yeah.
very steady, up about 6% for Dabur, closing in on that 420 mark. We'll slip into a short break, come back, we focus on some more stocks and mutual fund queries when we return. All right, welcome back. You're watching Mutual Fund Corner. In the meanwhile, we're getting some queries on Twitter. Before we address our caller, Harsh, I would like to know from a viewer of ours, Anand Kulkarni wants to know if the new fund offer of Bharat Consumption Fund from ICICI Pru is a good bet. Anand Kulkarni writes to us on Twitter live.
Well, rather than answer the specific query, my point is a new fund offer. You obviously don't know the track record, and I think the track record is very important to decide whether you would want to invest in a particular fund or not. So any new fund offer, not just the one that you have highlighted, I would look at it only if it is coming up with a strategy that does not exist today. If similar strategy exists somewhere else and there is already a whole track record to that kind of a scheme, I would any day prefer a tried and tested scheme over a new fund offer. There's no major advantage of going in for an NFO. There is, in fact, no advantage at all of going in for an NFO.
In fact, the NFO that he is talking about has actually shut in April. So anyway, it's a fun focusing on consumer durables, auto, healthcare, services for the entire consumption basket. All right, up next, a query comes in from Ashish Chauhan. He's on the line with us from New Delhi. Hi Ashish, how can we help you?
Yeah, hello ma'am, good afternoon. Actually, I want to invest 25,000 per month for short term, like for 1 year maximum.
Okay. So you're only 27, right? So do you have a need or a requirement for which you're just looking at a 1 year horizon?
Yes, actually I want to purchase a car, and that's what I'm trying to save for.
All right. So I hope you are already an active investor, Ashish.
Yes, actually I have I trade in futures from time to time.
Okay. Well, Ashish, I have a lot of things to say, but I'm going to hold back for the moment. Kalpesh, first, I'm going to hand it over to you. He's looking to buy a car for which he needs to make some investment. But I mean, my only misgiving actually about this whole thing is that I mean, what kind of an investment can give him the kind of returns that he's hoping for to be able to buy a car at the end of it, given that he's anyways a futures trader? So, Kalpesh, your call.
So, it's actually, Ashish, that it's a paradoxical situation which, the investment profile is based. But I think let me compliment you that at least for the car purchase goal which you've highlighted, you are on the right track. And the amount which you wish to set aside for in the next 8 to 10 months of 25,000 per month has to go into a debt fund. And into the debt fund family, also into the ultra short-term funds, not the ones which have the longer duration in it. So I would suggest the Aditya Birla Sun Life Savings Fund for that period. And it hopefully right now the way the interest rates and all are shaping up, it should give you a better return than your conventional savings account or something. So be focused on that. And about your complete profile in which you are investing, I think another query is justified.
All right, 25,000 per month. What car are you looking to buy, sir?
Any car somewhere around 10 to 12 lakhs. Right now, looking at S-Cross.
Okay, 10 to 12 lakhs. You want to buy a car?
Actually, I'm trying to save for the down payment. I want to purchase it on EMI.
Okay.
So,
Okay.
But Ashish, you're already a futures trader, right? Why are you now looking for the mutual fund route?
Did you lose money in futures trading?
Yes, exactly. If in case I lose money in futures trading, there is someone who is taking care of my money.
All right, Ashish, all the very best. Well, I hope you continue investing and take the mutual fund route for other for investments besides just this 1 year as well. All the very best. Let's take a quick break. Back with more queries in a bit. Stay tuned. Welcome back. Ajanta Pharma reacting to a very strong set of numbers. So operational performance looks very, very impressive. Margins have come in upwards of 30-odd%. A profit in excess of 100 crores. The expectation was that it would be a flat quarter, but the company thinks anything but flat for this time. So a strong performance there and very, very high volumes, almost 5 times the 10-day average. All right, last query coming in. This time, Rohit Mandotra has written to us from Mumbai. He wants to know the best way to add US equity exposure to his portfolio and wants advice on which mutual funds he should be looking at. So, Harsh, this looks like a pretty straight cut answer. What's your advice?
So, I think direct investment in US equity is not really advisable unless your amounts are very sizable, because transaction costs are very high. And please remember, if you invest directly in US equity, you would have to report it separately in your income tax returns, and that could invite specific scrutiny. So how do you take US equity exposure? Do it through the Indian mutual funds, who in turn take US exposure. I think the 3-4 major players who are, and this is treated as Indian investment, debt fund treatment for tax purposes. The 3-4 major players are flashing on your screen. Primarily, there is a Franklin fund which feeds into the US opportunities, the Templeton US Opportunities Fund. There is the ICICI US Blue Chip Fund, which invests directly into the blue chip. There is a DSP BlackRock fund, and there is an Edelweiss fund. These are the major funds that allow you to take US equity exposure.
Right, Harsh, thanks a lot for joining in along with Kalpesh. Thank you for advising our viewers on their mutual fund related queries. With that, we have to end the show, but do remember to email us all your queries. We'll address them with our experts every Tuesday and Thursday. This is with regards to mutual funds. With that, we hand it over to closing bell after the short break.